Hi guys, I am Anuj Jalota. These are RTPs for paper 4 costing September 2025 complete video and solutions. Now all the past RTPs and all the past papers can be found on this free course on my website, which is a special course only for the RTPs and for the past papers. We are the only one who release the complete solutions of the institute paper either on the same day or after 1 or 2 days of the examination to happening. Complete solution. Wherever I say is wrong, we try to bombard the institute also with all our things. Coming to this RTP intelligently made by the institute. Question number 1 was of standard costing, and over here one new concept that I added recently in the new batches, in the new courses, that was of single plan, that is applicable to material price variance. That will be useful over here. Apart from that, question number 2, this is similar to our last question of activity based costing that we all have done in class. 3, 4, 5, 6, these were small MCQs. Out of that, I like this question a lot. This is about your break-even sales, but it was a very intelligently made question. Then question number 7 was on material costing, easy question. I liked question number 8 also for one reason. It had all the plans. It had a SPR plan, a row 1 system plan, a Halsey system plan. As per me, this was the best question in the RTPs, that is of overheads. Over here, reapportionment was superb. Now, favorite things of mine. Criticize the institute. That I will still do. In question number 10 and 11, I'll come to question number 10 first. Question number 10 was on cost sheet. Now, might be ICAI copied the question from somewhere that was made before 2018 and they gave the solution of that only. They don't know only that there is a separate head in costing called as administration overheads related to production, and they got that thing wrong. My job is to be doing justice to the subject, not justice to the institute. So that is one thing that you all can note correctly. Second thing, in this case, in cost accounting system, they had a question on reconciliation. Now, one thing I honestly think, some of the students who are watching this, if you have access to the institute, please ask them where is interest on loan supposed to be taken. Because ICAI says in chapter number 6, it is to be taken as part of cost of sales. You write it above cost of sales. I say, okay, sir, I will start to be writing it. But in reconciliation chapter, they say, no, it is a financial expense. It should not be written in cost sheet. How you can have two different rules for the same thing in two different chapters? Some sense I say should have though. They all don't have. This question is a nice question. I'll not say a very important question, but a very good question to be asking. Process costing, this is same as question number 2 of our textbook. Numbers are also almost same only. Joint products, byproducts is a okay question. These 3 I'll be saying normal questions. Not very tough, not very simple. In that, this could be the best out of the last 3 as such. So you all can start away with question number 1 directly now. One small thing. You will be getting 2 PDFs from my side. One complete question, complete solution that I will be giving you all printed. If you're very lazy and if you're not interested in learning well, you can download this and then you all can keep on seeing that thing. A better option is I have another PDF. Over there we have all the questions, but we have blank formats of the solutions and you all can solve with me. That will increase your confidence. And your solving will be over forever. So I would recommend that you are in category 2 of the students. You will download that second PDF and you all will do it. With that, your revision will automatically happen. Then before the exams, you might not see the RTPs also. That is one thing that I've been doing for all the RTPs. Now, few things that students can make great use of through my website, www.ajnext.com. First, there is a complete free course of costing in English, Hindi language. Might be in another 6 months, complete English will also be coming. These are recordings of my previous batch. But they all have everything that you all can be asking for. Everything means you all have all the lectures, you all have a homework section, you all have rankings of every question, 1 star, 2 star and 3 star, 3 star being most important. You all have the summary of every question. You all have test of every chapter. Okay. Even if you will be doing that, believe me, I don't want to give a number also now, but thousands of students every year get 90 or more only by watching these lectures. No validity problems, no nothing. These lectures are available on YouTube also, but a better option is you go to my website and you all watch these lectures from there. You can watch them either on the website through a browser, or you can download our app also. These courses I've made completely free. In case somebody feels, no sir, we want your latest batches, then the latest batches are available in 2 languages in costing. One is English Hindi mixed and one is full English. If you want, you can be enrolling. It's a paid batch. Okay, that is first. For FM, latest recordings are available in English Hindi language. Might be in another sometime or something. Complete lectures will be there in English language also for the South Indian students. Okay. Next, there is a complete free course of RTPs and past papers that I have told you all. That is also available on my website. Okay. Link of all these things I have given to you in the description. Okay. Without wasting more time, let us start away to solve question number 1. We'll start away with question number 1, that is on standard costing. Now, this question included that new thing also of single plan that I taught you in material variances. Okay. So in case you all have not watched, it's the last lecture that I have added to your course. Okay. Last lecture. So let's do this question. In this question, only thing that is different is material variances, because that will be based on single plan, which we all have done. By default, we follow partial plan. Okay. But you all can follow single plan if the sum says. Okay. There'll be some hint in this question. Apart from that, everything is super simple in this question. Okay, so let's start with doing that. Also Toys Limited is an exciting new player in the toy manufacturing industry, founded with a passion for creating high quality, engaging and educational toys. The company aims to make positive impact on the industry and also on development of young minds through imaginative play. So therefore, it's a toy manufacturing company. The following statement provides a comprehensive analysis of the various cost variances for a particular period, outlining the differences between expected cost and actual expenses incurred. So these are the variances for a certain period. We don't know that period, 1 month or 1 year. It's just some period. Cost variances, material price and usage. Okay, so this is one thing. Further, then labor rate and efficiency. Okay. Then for variable overheads, just a sec. It is expenditure and efficiency. And for fixed overheads, it is only one single variance, that is fixed overheads expenditure variance. Okay, so only that much. Okay, what it has become, I don't know. So this is your last variance. Okay, the budget for the same period, this is the budget, reflected the following data. Production volume, 7,500 units. Direct material purchase, direct material use. These are all budgets. Budgets are estimates, kind of your standards. Okay, further, direct material cost, okay. Just a sec. So I'm just trying to segregate the data of material. So this is material data, this is material data, this is material data. Okay. Then direct labor hours, direct labor cost. Okay. Then in this case, there is variable overhead cost. And lastly, there is fixed overheads cost as such. Okay. With that, I'll proceed now to the next thing. Some other information relating to the same period is provided below. Stocks of raw material and finished goods are valued at predetermined standard cost for easier cost comparison and reporting. It's a hint for you. If ever raw material stocks are valued at standard cost, it will always mean that company follows single plan for calculation of material variances. And under single plan, material price variance is calculated at point of purchases. At point of purchases. You will have to do a recap of single plan and partial plan. Again, I'm saying raw material stocks, if they are valued at standard cost, that means company must be following single plan for calculation of material price variance. That's very important for us. Okay. The actual number of units produced was 7750. Okay. the direct material purchase was 5,000 kgs. Okay. From the following information, you are required to figure out the following. In actual, so you have to find out all actual information. If you try to be thinking, budgeted data is over here, variances are given to you over here, you have to try to calculate the actual data. Okay, what actual data? Quantity of material used and direct material cost. Okay, direct labor hours. Okay, direct labor cost, variable overhead cost, and fixed overheads cost. Okay. Now, I'll start away with the things. I've kept one thing for your reference, which I will be deleting shortly, just to recap. Under partial plan, material price variance is calculated for quantity consumed. Okay. But over here, under single plan, material price variance is calculated for quantity purchased. Okay. How do I know in this question there was a single plan that was followed? Is because of this point. Raw material stocks under partial plan are valued at actual cost, but here they are valued at standard cost. In the question it was given to you, raw material stocks are valued at standard cost. That means company follows single plan. So if you follow single plan, then material price variance will be calculated for quantity purchased. Okay. Now I'm deleting this entire thing because I have to be solving the question. Okay. See. Just a sec. Yeah. So this part I'm now deleting. Okay. Now let's start it off. See. Now basically the question is all about material variances. Okay. Then labor variances, variable overhead variances, and fixed overheads. But all these three things are dependent upon what factor? Output. Okay. This data is your standard data. This standard data is based upon 7,500 units. But this is your standard data. But in actual, we all have made 7,750 units. So therefore, revised standard should be made for 7,750 units. Is that all okay? So therefore, this is your given standard for 7,500 units. But in actual, we all have made 7,750 units. So therefore, revised standard should be made for 7,750 units. That is whatever I have done over here. See, given standard is for 7,500 units. But in actual, we all have made 7,750 units. So therefore, revised standard will be made for that thing only. Okay. This should be units actually, not kgs. Okay, so units. Units. Okay, further. Now listen. In this case, for 7,500 units, how much raw material should have been used and purchased? 3,750. Okay, so therefore 3,750. Okay, then the material cost for 7,500 units is 112,500. Take your calci, please. Divide 112,500 divided by 3,750 should be 30. Okay. Revised standard is being made for 7,750. So for this, it is this. For 7,750, it will be how much? Please cross multiply. 7,500 divided by 3,750. 3,750 divided by, this will be this into this divided by this now, divided by 7,500 into, so this upon this into this figure, 3,875, then into 30, 116,250. Okay, now this is your data that is there in the question. Okay, any doubt till now? No. So let's try to be proceeding. See, you all have some variances no in the question. Which variances you all have? This is material price variance. Okay. Now listen. See, direct materials purchased were 5,000 kg. So therefore, in end, we all have purchased 5,000 kgs of raw material. So why did you make a format like this? In this question, there will be stocks. Sir, how do you know there are stocks? See, quantity purchase is given to you, 5,000 kgs, and they have asked you what is quantity consumed. So quantity consumed must be different as compared to quantity purchase. So therefore, there must be stocks. Whenever there are stocks, we make a format like this: opening stock, add purchases, less closing stock. Okay, that's what I've tried to be doing over here. Okay. So let's start to be using material price variance. This is material price variance. Please do remember this is material price variance under single plan. I'm repeating now, I think for the third time. And under single plan, we calculate the material price variance like this. Standard rate minus actual rate into actual quantity of raw material purchased. If you remember my exact words, single plan, this name comes from where? The moment you purchase, calculate the variance. The moment you purchase, calculate the variance. Okay, so therefore, single plan, this variance is how much beta? 25,000 favorable. So therefore, this is 25,000 favorable. You should have purchased at what rate? 30. You purchase at what rate? That we don't know. Into actual quantity of raw material purchased. So therefore, you all have purchased 5,000. This 5,000, let it go over there. 5 favorable is equal to 30 minus actual rate. Now, actual rate must be lower, no? Because variance was 5 favorable. So therefore, 25. So 5,000, 25. So therefore, this will be 1,25,000. Okay. That's it about this variance. Okay, job done. Second, is there some other variance? See, it's a question on missing figures. You all should be able to understand that. Because variances are given to you. So therefore, you have to find out all actual informations. Use your variances, no? What other variance is there? Usage variance 3750 adverse. Okay. So material usage variance. How do you ever compute material usage variance? Here, how much raw material we should have used? Standard quantity of raw material to be used. Minus how much actual quantity of raw material we have consumed into standard rate. Please do remember partial plan and single plan. Although this question is on single plan. But do not apply it to material usage variance beta. Usage variance will always be there for usage only. Okay. So usage. Acha, this was 3750 adverse, no? Just a sec. I become old, so therefore I forget. 3750 adverse. How much raw material you should have used? You should have used 3875. You consumed how much? I've got no idea. Into standard rates, that's 30. Take 3750, divide by 30, please. I'm taking 30 to the other side. 125 adverse is equal to 3875 minus actual quantity consumed. Now, actual quantity consumed must be higher. That is why the variance is adverse, no? It must be higher by 125, no? So, therefore, it must be 4,000. Okay. So, therefore, this will be 4,000. Now, this is your actual quantity consumed. Now, one small thing, if you all want, you all can do this. Not compulsory. It will not get you any extra marks, but just I'm telling you all. This will be your balancing figure. There is no opening stock in this question. And if this is single plan, raw material stocks are valued at standard cost. Standard cost was 30. So, this figure was 30,000. Okay. This figure will be 95,000. This is single plan. Raw material stocks get valued in this case at standard cost. So this 4,000 I dragged from here. This 25 I dragged from here. Okay, that's it. Have I answered anything or not? I'm wondering that only. See, quantity of raw material used, that is nothing but 4,000. So answer can be either this and this. Okay. And direct material cost is, actually these words are slightly wrong. They should tell me they want which direct material cost. Direct material purchase cost or consumption cost. They should tell me that. Sir, then what to do? Then honestly now, I must be thinking, see, if it was direct material consumption cost, answer would have been 95,000. But there is no 95,000 that appears in the options. So therefore, it must be direct material purchase cost then. 1,25,000. Is 1,25,000 part of your answer? Yes. So therefore, this must be your answer. What else to do, beta? This is the only way for me to be solving then. Okay. They should mention, no, because by default, I'll be thinking direct material cost means whatever you charge to cost sheet. In cost sheet, you all charge consumption only here. But that consumption, if I take that answer is no longer here also. So therefore, then in that case, I take purchase cost only then. Okay. Chali, this thing is altogether done. Now, part 2 and 3 are all about labor. So, let's start to be doing labor. Now, labor. See, for labor, you have got two information. For 7,500 units, 5625 hours for 7,500 units. 5625 labor hours should have been used, and 112,500 should have been the labor cost. 112,500. Pick up your calci. 112,500 divided by 5625. This is 20. But revised standard will be made for 7750 units. Okay. So please cross multiply 5625 divided by 7500 into 7750. This is 5812.5 into 20. 116250. Actual data we all don't have only. Okay. So then what to do? Beta, then you all have two variances, no? You have labor rate and labor efficiency. 5,3750. Just a sec. I'll write down labor rate variance. 5,000 adverse. Labor efficiency variance 3750 adverse. Okay. With the help of these, try to be computing your informations. Labor rate variance. How do you all compute standard rate minus actual rate into actual hours? Standard rate is 20. Actual rate I don't know only. I don't know actual. Actual hours also I don't know yaar. How to be solving? We will see. Let's try to be computing labor efficiency variance. For 7750 units, you should have taken how many hours? So standard hours. How many hours did you take? Actual hours multiplied by standard rate. So 5812.5 minus actual hours, which we don't know, but standard rate is 20. Take 20 to this side. So 3750 divided by 20, 187.5 adverse is equal to 5812.5 minus actual hours. Now actual hours must be higher, no? That is why the variance was adverse. So therefore plus 5812.5. So therefore actual hours in this case must be 6,000. So that 6,000 we bring over here. So I guess this job is altogether done. And I guess over here the missing figure was 6,000 only, no? So therefore that 6,000 now I bring over here. Okay. So let's take 6,000 on this side then. 5,000 upon 6,000 will be 0.833333 adverse is equal to 20 minus actual rate. Now tell me one thing. Actual rate will be higher or lower? Higher, no? Because variance is adverse. So therefore this plus this 20.833333. 20.833333. So what I'm going to be doing, I'll multiply 6,000 into 20.833333. 20.833333 into 6,000 is equal to 1,25,000. Okay. Now I'll try to see now what these guys have asked you. Direct labor hours were 6,000. Okay. Direct labor cost we just now calculated 1,25,000. Okay. So these two parts are done. Acha. Variable overhead cost. Okay. Now if you all remember, variable factory overheads is some expense like electricity. Okay. It is incurred whenever the workers work. So therefore it is almost like labor only, no? 7500, 3750, 7750, 7750. In fact, hours come from labor only, always. Okay. 5812.5. Okay. I've just copied everything of labor only over here. Everything of labor I have copied. Okay. Obviously, everything means hours and the output. Okay. Because the rate will be coming off electricity. Okay. Now, please do remember, I have copied these hours over here because there are no idle hours. Else, I would have subtracted the idle hours and written hours worked. Okay. Chalo, let's proceed. Let's proceed. What other data we all have? For variable overheads, variable overhead cost was 56,250. Okay. 56,250. I'm taking calci. 56,250 divided by 3750. Just a second. These hours are wrong. I have to copy labor hours. I copied material by mistake. Sorry, 5625. Sorry. 5625. So therefore this rate will be 10. No, that's obvious. Okay. 58125. Okay. Now see. You all have this data now. For variable overheads, which variances you all have? Just try to be thinking. Sir, I have variable overhead expenditure variance. 15,000 it was. Variable overhead expenditure variance. Now, variable overhead expenditure variance is exactly like rate variance. It is standard rate minus actual rate into actual hours. So, expenditure variance was 15,000 adverse. 15,000 adverse is equal to 10 minus actual rate into 6,000. Take 6,000 to this side, 2.5 adverse is equal to 10 minus actual rate. So actual rate must be higher by 2.5, no? So therefore it must be 12.5. 12.5. 6,000 into 12.5 is equal to 75,000. What they have asked you for variable overheads? Actual variable overhead cost, that is 75,000. So therefore this should be your answer. This is easy stuff. Actually, except material, everything is simple. Lastly, they have asked you fixed overheads cost. Let me see for fixed overheads which variance you all have. Fixed overheads expenditure variance. How do you compute fixed overheads expenditure variance? Is budgeted fixed overheads minus actual fixed overheads. That's how you will compute, right? So, budgeted fixed overheads, this is the budget. 112,500. 62,500 favorable. So, you must have spent less, no? So therefore, 112,500 minus 62,500. 112,500 minus 62,500. So therefore, actual fixed overheads must be 50,000. Is 50,000 an option also in the question? Yes, option number D. That's it about this entire question. Please do remember, in case of case scenarios, you are not supposed to be careful about the presentation. Okay, forget the presentation. Try to arrive at the answer. Okay, that's it about this question. Chale guys, we'll start away with question number 2. With the rise in carbon dioxide, a greenhouse gas released in the environment when fossil fuels are burned, Earth's natural greenhouse effect is becoming too weak, causing global warming. Now, although we are commerce students, at least we all can understand the language. To contribute towards a global environment for the betterment, various cars and scooter manufacturing companies are shifting their production towards electric vehicles. Companies are heavily investing in R&D and production of EVs. Ole Limited is also one of the companies belonging to the scooter manufacturing industry. Watching its rivals shifting their production to EVs, the management of Ole Limited decided to take advantage of this open opportunity. Okay, so Ole Limited is two-wheeler scooter manufacturing company. It had been only 4 years since the company started its production of EVs, but the last year, the management of the company also decided to expand its product line to 3 variants of the scooter. Okay, that is Ole EV Max, Ole EV Ultra, Ole EV Pro. I think might be a question belonging to Ola. You all can comment that who is the founder of Ola. So they didn't want, I guess, to be using that name. Okay. The following information is provided for the current year from the books of Ole Limited. Okay. So this is the information for the current year. Average revenue per unit of the 3 scooters. Please do remember that we are manufacturing scooters. So therefore, selling price will be quite high. So therefore, this is the selling price in this case. Further, this is the selling price. Further, average COGS per unit. Okay. So this is your COGS per unit. Last year, when the company initially expanded its product line, the sales were not much noticeable compared to the earlier category of scooters. Okay. So last year we had introduced these 3 scooters. Okay. So last year sales was not much noticeable. The company could only sell this, this and this of the 3 types of the scooters. Ola Max, Ultra and EV Pro. As against orders of this, this and this respectively. So therefore, these were the number of orders that we got. Number of orders means number of units orders that we got. It's a scooter. So therefore, we got orders for 616 units of the Ola EV Max. But we could sell in this case this much. Okay. Might be whatever is the difference, we will supply that in the future years, no? However, with the increasing awareness about the EVs, more and more people started to buy EVs. And during the current year, the company's orders and sales jumped 5 times as compared to the last year. So this was the sales in the last year in terms of number of units. These were the number of orders that we all got. Okay, this year it has become 5 times. One thing I'm telling you all in advance, if you'll multiply this by 5, if you'll multiply this by 5, this will give you sales and the number of units of orders that we will be getting in the current year. That is exactly what I have already done, because for this question, no, numbers are becoming too big. I have already in the students copy also, I have already presented the solution for this. I'm just trying to be explaining you all, nothing much. Okay. So let's not try to be solving it, because we all have done a question which is 90% similar to this in your class books only. Its free lecture will be there on YouTube also, because most of the lectures are there on YouTube for the new course. You all can check it up. It will be the last question on activity based costing. Okay, for those students who are not our students. So I take this data and I take this data. I multiply it by 5. See what I have already done in the solution. Statement to show last year's and current year's orders. So therefore, last year's number of orders received was this. I multiplied it by 5 and I got this answer. Last year's sales was this. I multiplied it 5 times and I got, these are the number of units of scooters that we all sold. Okay. So what I will do, I will highlight only current year's data, because this question is all about current year's data. So I take this. Okay, and I do it further. For earlier years, Ole Limited used gross margin percentage to evaluate relative profitability of all its EVs. So till last year, we had to be finding out that which is our best product. Okay, how do we do that? We were using gross margin percentage. Gross margin, how do you compute gross margin? Is sales minus COGS, that will give you your gross profit. So these guys were using GP ratio, okay, for finding out which is their best product. However, from the current year, the company plans to use activity-based costing for analyzing the profitability, and the activity analysis of Ole Limited is, okay, they have already given you cost drivers. Now this is important, pay attention. Customer purchase order processing. Please do remember, customer gives us the order. Okay, suppose I got 100 orders, example. So I have order book of 100 units. I supplied 90, example. I supplied 90, okay. So my sales will be 90 units. Number of orders will be 100 units. 10 will remain in the pipeline. I'll sell them in future. Okay. So customer purchase order processing. Cost driver for that is purchase order by customers. Okay. So cost driver is number of orders. Line item ordering. Its cost driver is line items per purchase order. This is important. Store delivery. Its cost driver is number of units sold. Okay, cartons dispatched to the stores. Its cost driver is cartons dispatched to the store per unit. Okay. Shelf stocking. See, I'll tell you the meaning of this. We have to supply scooters, no? Might be we are supplying parts of the scooters in cartons. Okay, so one scooter, suppose we supply in form of say 20 cartons. Okay. So therefore here cost driver is number of cartons. Further, shelf stocking at customer store. Shelf stocking, we arrange the goods in shelf. Okay. For that, the cost driver is hours of shelf stocking. Now, you will remember a question which is similar to this question that we all have done. Over there also, all these cost breakups were only there. All the support cost for the current year amounts to 66,23,760. Support cost means cost that supports the organization, means overheads. For overheads, only activity-based costing is there, no? These costs are assigned to all activity areas. The cost in each area and the quantity of the cost allocation used in that area are line item ordering 14,04,480. So therefore, this activity cost is over here. Further, cartons dispatched to the stores 16,72,000. Okay, so therefore this cost is over here. Shelf stocking. So therefore this cost is over here. Okay, this cost is over here. Further, The customer purchase order processing cost is 17,60,000. So therefore this cost is over here. With store delivery cost of 15,62,000. So this cost is over here. So for all the 5 activities, costs are given to us. There is nothing that is left out as such. So if you total up all these green costs that I have highlighted, that should be coming to 66,23,760. You all can be doing that. Acha, line item ordering. Its cost driver was what? Line items. No, they have given you line items. 6,610 line items. For this, it was cartons dispatched to the stores. 16,72,000. 339,240. Okay. Shelf stocking, 339,240 carton. That was a cost driver. Shelf stocking at customer's store. This was a cost. And these are the number of hours. Okay. Now you all will understand. If I take this and if I divide by this, that'll give you cost per unit of cost driver. No, I'll just do that here. 14,04,480 divided by 66,110. So therefore, this will be giving you 21.24 per line item. Okay, then 16,72,000 divided by 339,240. 4.93. This is 4.93 per carton. 225,280 divided by 2904. 77.58. 77.58 per hour of shelf stocking. Okay, then further. Customer purchase order processing was 17,60,000. Now that is dependent upon purchase orders. Purchase orders I calculated also, no, for you all. Number of purchase orders of current year was 5,885. So if I divide this thing by 5,885, that is number of purchase orders. So 17,60,000 divided by 5,885. This will give you 299. Why are these numbers so awkward here? 065 per order. Then delivery cost was 15,62,000. Its cost driver is number of units sold. No, so total number of units sold were how much, beta? 4,840. $15,62,000 divided by 4,840. 322.73 per unit sold. Okay, these will be your cost driver rates. Acha, one thing that I will do for you in the future, I will try to tell you how this answer comes, how this answer comes, how this answer comes, and what is a breakup, or how these answers have come. It means the same thing only. Okay, I'll try to be doing that thing for you. Average number of line items per order. Per order means we get a order for one scooter. Okay. That is one order. In one order, there are 10 line items. Okay. Over here, there are 12. Over here, there are 14. You can multiply this data by number of orders. Okay. And then if you try to total, it should be coming to 66,160. Okay. It should be coming to that. I have done that thing over here for your reference. See, in this one, no, average number of line items. I multiplied it by number of orders that we all got. Number of orders I had calculated over here, beta, 5,885. Okay. Once you all do that, please multiply. If you will be doing that thing, it will be coming to 6,610. I told you I'll get it for you somehow. Okay, further. Further next, average number of cartons shipped per store unit. Whenever you sell the scooter, might be you pack it up in cartons or parts of that, and those guys will assemble it. For every one unit that you sell, there are 16 cartons, 80 cartons, 300 cartons. This, if you will multiply by quantity sold, and then if you total, it should be coming to these many cartons. This again 339,240. I have calculated that thing over here. See, average number of cartons over here. Number of units sold is over here. Okay, number of units sold is over here. You will multiply this with this. The moment you all do that, okay, that will give you this data, and the total of that thing will be 339,240. Okay, further. I told you I'll try to get its breakup. Further. Average number of hours of shelf stocking per store delivery. Whenever you deliver, you will do the shelf stocking at the customer's end. Okay, you will arrange the goods in racks up and so on. So for one unit, you will be taking 0.1 hours. For one unit that you deliver, 0.6 hours. For one unit that you deliver, 3 hours. This, if you will be multiplying by number of units delivered or number of units sold, it means the same thing only. And then if you total, that should be giving you all 2904. Okay. Again, I have done that thing, although not hours, but I have done that thing extra over here. Shelf stocking hours per store delivery multiplied by number of units delivered. Okay. Then if you multiply, that should be giving you this particular data, 2904. So therefore, I have just tried to get you all the breakups as such. I gave you the breakup of total line items. You have the breakup of this. You have also got the breakup of this. And this data and this data, you already had from the first table, number of orders and current year sales. Okay. Now, I'm only reading the question actually till now. The company wants you to figure out the following to ascertain which of the product line is more profitable. Okay. For the current year, how much is the order received and the units sold for the 3 products? Okay, this I've already answered, I guess. How many orders are received and how many units are sold? Okay, my first table will give you the answer. So orders are 3080, 1980, 3080, 1980 and 825. Then 2640, 1650 and 550. So therefore answer should be in this case the last one. Okay. Further, I'm just taking it up now. Okay, next one. The total gross margin percentage and the operating income percentage will be from gross profit. If you subtract overheads, you arrive at operating income, correct? So for this thing, we'll have to be starting to be making P&L account. Sir, for P&L account, first thing that we all need is nothing but sales. Sales will be quantity sold. We calculated 5 times of the last year into the selling price. You'll arrive at sales. From there, you subtract your COGS. COGS will be all your manufacturing cost, obviously excluding the overheads. Okay, because for overheads, we are following activity-based costing here. So therefore, this into quantity sold. Sales minus COGS, okay, will be giving you all gross profit. From there, you can subtract overheads. 6623,760. That will give you your operating profit. And then you can compute those percentages. See, exactly that is whatever I have done over here. Statement of gross profit and operating income percentage. Number of units sold into selling price for the 3 products, that will give you sales. Number of units sold into COGS per unit, that will give you your COGS. This will give you gross margin. From gross margin, you subtract your overhead cost, that will give you operating income. So GP ratio will be this upon this into 100, that is 4.96. Operating income will be this figure upon this figure into 100, that will give you 3.72%. Okay, that's it. The job is done with this. Okay. So answer should be 4.96 and 3.72. 4.96 and 3.72. So answer should be this. Okay, further. The cost driver rate relating to the 5 activities would be, I calculated that thing for you. Customer order is the first one. So customer order is 299.07. Just a sec. 299.07. So it could be this or this. Second one is line item ordering. Line item ordering is 21.24. 21.24. So I guess it should be this one only. I'll check up the remaining ones. Store delivery is 322.73. 322.73. Yes, store delivery. So I guess even this is correct. Carton dispatch is 4.93. 4.93. So even this is correct. Shelf stocking 77.58. 77.58. So I guess so. Sorry, 77.58 over here. So I guess so. Answer should be B over here. That should be the correct answer. All the answers are matching. Okay. Now for this, no, in your solution book, I've prepared one extra statement also, just like that. All the cost, okay, all the cost driver items, okay, I divided, I came across the answer. Okay, so therefore that is whatever is this. Further. Fourth, operating cost of individual products as per the method proposed for the current year. From current year, we are shifting to activity-based costing with respect to profitability analysis would be. So therefore, they want that breakup of 66,23,000 or something. Okay, that overheads that was there. See, now once you all have got this data now, once you all have got this data will be useful for order processing cost. This will be for line item ordering. Okay, this will line items that will be. This data will be useful for stores delivery. This will be useful for the cartons cost. This will be useful for shelf stocking cost. Okay. All these numbers you will be taking and multiplied by 299.07. That is the cost per order. So that will give you the breakup of this entire cost. Okay. Then total number of line items 21.24. You multiply this, this, and this. You will get the breakup of this. Store delivery 322.73. Okay. Per unit sold, you multiply this, this, and this by 322.73. That will give you the breakup of that delivery cost. Then cartons dispatch 4.93. You multiply with number of cartons dispatch of each product. That will give you the breakup of this cost. And lastly, shelf stocking. These are the shelf stocking hours multiplied by 77.58. Okay. That will give you the breakup of this particular cost. Exactly that is whatever I have done in your next statement. Okay. So therefore, you all can be seeing number of orders of the three ones multiplied by this. Number of line items into this, store number of units sold into this, cartons dispatched into this, shelf stocking multiplied by this. The moment that particular thing is done, this will give you the breakup of that entire 66,23,760. It is bit approximate answer because everywhere there were decimals. Okay. So therefore we have got the breakup as such. Okay. 2556. Just a sec. I just have to figure out the correct answer now. 25,56,059. I guess it could be this answer. Second one, Ultra 16,11,013. No, 23,56,890. Yeah, 23,56,890. Last one was 16,11,013. 16,11,013. So I guess last one is your answer. C is not your answer. D is your answer. Okay. This also matches. Chalo. It might be approximate, although we are matching. Okay, but it might be a bit approximate also whenever you are solving. Okay. Now the last part. Operating income as a percentage of the revenues for each product line of the three products when all the support costs are allocated using ABC would be. Okay. So now see, your first statement was this, no? Now we have the breakup of this also, beta. We just now calculated its breakup. So therefore you will arrive at operating income. Once you get that, this figure divided by the sales into 100 will be operating income percentage as a percentage of sales. That is whatever I have done in the last statement. So therefore revenues minus your COGS, that gives you gross margin. Till here it is same as your first statement. From here, you can subtract your overheads that we calculated over here, no? That you all subtract. This will give you this. This upon this into 100 will give you this answer. 1.73, 3.53, 1.73, 3.53. I guess so it should be the first answer. Last one is 7.75% or what? Yeah. So therefore this should be your answer. On purpose, I have not solved this question with you all only for one reason. One, we all have done a similar question like this in class. Second, numbers were too big. So therefore, I thought I'll just try to tell you all the logic of all the things. Okay, chali. So that's it for question number 2. Chali guys, so question number 3 should be a simple question of small one only. Listen, suppose the units of a product are produced at the rate of 4 units per useful direct labor hours. Okay. Just underline this word further. Direct labor idle time is 10% of the hours paid for. Okay. So if suppose like, you all pay in this case for 100 hours. Out of that, 10 hours in any case is idle time. So therefore hours that you are paying for is 100. But then workers will be working for 90 hours. This 90 is similar to useful hours. Okay, because these are the hours that we will be working. Sales of 1000 units are budgeted and finished goods stock is expected to rise by 100 units. The budgeted direct labor hours for the production would be the 4 options. Okay, now first of all, suppose you are trying to make labor budget. I'm asking you all, labor gets paid whenever they all work. By working, they all do their production, no? So therefore, I think so. The first thing that we all should be doing, we should try to be making a production budget. Okay. So through production budget, we try to be finding out quantity produced of finished goods. How do you find out quantity produced of finished goods? We start away with quantity sold of finished goods, add closing stock of finished goods, less opening stock of finished goods. That will give you, in this case, quantity produced. That will give you quantity produced of finished goods. Okay, now see. Quantity sold is 1000 units. So 1000 units. Add closing stock, less opening stock. Now, neither closing is given, neither opening is given. But those guys have told that this will be exceeding this by 100 units. See over here, finished goods stock is expected to rise by 100 units. Okay. So therefore, I don't have this, but then I have the difference of that. That will suffice, no, I guess. So quantity produced of finished goods will be 1100. Okay. This is quantity produced. This is quantity produced. But we don't want quantity produced, beta. We want hours to be paid for. I want that. So see, 1100 units, if we are going to be making, divided by 4. So do 1100 divided by 4. Now this will be giving you all 275. Now 275, tell me one thing. These are the useful hours or these are the hours paid for? These are the useful hours, no? Because these are the hours that we will be working here as such. So therefore, 275 useful hours are needed to produce 1100 units. Tell me one thing, this represents 110 or 90? 90, no? Because these are the hours that we will be working. So therefore, divided by 90%, this will be giving you all hours to be paid for. So therefore, divided by 90%, this will give you 305.56. Okay, these should be the hours paid for. I guess the closest to that is this particular answer. So therefore, answer should be this over here. Okay, easy question. I don't think so there's much in the question. But for 2 marks, it's a nice question, to be honest. Okay, means something different as compared to whatever we all have normally done in our class. Okay, so that's it. Question number 3. Question number 4. This is on cost accounting system. Let's do that. Which of the following is a correct journal entry? As would appear in the costing books, when overhead expenses incurred are 500, production 250, and administration 250. So we incurred 500 rupees of overheads. Okay. So if we incurred 500 rupees of overheads, out of that 250 rupees is production overheads. Okay. Production overheads means factory overheads, and 250 rupees is admin overheads. You have the 4 options over here. 1, 2, 3 and 4. So what is your correct journal entry? One thing you are paying, no. So cash bank goes out. So therefore entry should be something account debit to cash bank. But cash bank will not be coming, I guess. This must be because in your 4 options, no. I see over here cost ledger. I see over here cost ledger. Cost ledger means nominal ledger. Nominal ledger means general ledger. So therefore, it must be non-integral account. So therefore, instead of cash bank, we are going to be writing GLA account or cost ledger adjustment account, whatever you all call it. Okay. So 500 rupees are getting paid. Okay. That is one thing. So we incurred 500 rupees. And debit the respective overheads. So therefore, you will debit what, beta? Factory overheads account debit 250 rupees. In any case, whenever you incur the amount, if you all remember, on all the overheads account, on debit side, what comes in? What comes is nothing but actual amount incurred. And on credit side, what comes is absorbed. This is incurred, beta. So in any case, it will get debited, no? Factory overheads account debit, administration overheads account debit 250 to GLA account or to cost ledger adjustment account. This should be your entry. Now, I don't know where this is. I'm trying to be searching now. Okay, this is stupid answer. This is stupid answer. This is stupid answer. Factory overheads account debit means production overheads account. Admin account debit. Okay. To cost ledger. So therefore, I guess A should be the correct answer. So over here, now what to write down here? I'll write down A is a correct answer. That's it. Okay. Easy question. This is the basic entry that we all have done. Okay. So overheads incurred, those guys have asked you. Okay. Chali. That's it about question number 4. 2 marks, gift marks to you all. Chali. Question number 5, joint products and byproducts. In a company's production process, 2 joint products, A and B, are created simultaneously. So therefore, they are joint products, I think. The company operates in a manufacturing sector focusing on producing goods that require multiple stages of production, often resulting in creation of joint products that share common production cost. Okay. Until a certain split off point. For the last one, the following information is provided relating to inventory and sales. You have product A and B. You have sales, finished goods, opening stock and closing stock. So this is the data for the last month. Okay, whereby you have the data of quantity sold, opening stock of finished goods and closing stock of finished goods. Okay, further. Joint production cost for the last month amounted to 20,19,000. Okay. 20,90,000, sorry. These costs were allocated between the joint products A and B on the basis of number of units produced. So therefore, number of units produced means it must be output method. This method of apportioning ensures that each product is fairly charged for its share of overall production expenses. Okay. Whatever. Calculate the joint production cost to be apportioned to A for the last month. Okay, you have the 4 options over there. Now see. So in this case, let's start to be doing that. Now, you have 2 products, no? A and B. Joint cost to be apportioned is nothing but 20,19,000, 20,90,000. Sorry, yaar. Okay. You divide that among output. Output means quantity produced of finished goods. Okay. But you don't have quantity produced of finished goods. You have quantity sold of finished goods. 1,14,000 and 76,000. But then you want quantity produced of finished goods. From quantity sold, how do you reach at quantity produced, beta? Add closing stock, 5,700, 3,800, less opening stock, 1,900 and 7,600. Let's do that. So therefore, my writing has become worse now. Plus 5,700, less 1,900. 117,800. Achha, 76,000. Add 3,800, less 1,600. Less 7,600. 72,200. Let me just compute once more, please. 1,14,000 plus 5,700 less 1,900. 117,800. Okay, 76,000 plus 3,800 less 7,600. 72,200. Let's add it. 117,800. 1,90,000. So 20,90,000 divided by 1,90,000 into 117,800. So it should be 12,95,800. This should be 794,200. Calculate the joint production cost to be apportioned to A. So therefore to A, this is the cost. So therefore this should be the correct answer. Okay. Easy one. They should have asked some other method. Yeah, this is too simple. The output method is too simple as such. Okay. Chali, this question is done. Now, good question on marginal costing, CVP analysis. Question number 6. A company's sales could decrease by 50% before it starts to incur losses. Let me give you a small thing. When does a company incur loss? This same question I've asked you in the class also. When the sales are below break-even point. Okay. And for every 1 rupee of sales, it can contribute 40 paisa towards fixed cost and generating profit. Please do remember, this line that those guys have told, it is a normal line, beta. One part of contribution goes towards fixed cost. Other part of contribution becomes profit. So contribution is always towards fixed cost and profit only. For the current year, company's fixed cost amounts to 5 lakh rupees. Okay. Calculate the projected sales. Okay. For the current year, company's fixed cost amounts to 5 lakhs. Okay. First of all, let me do one small thing. See, first line tells me that I can try to think of finding out break-even point. Let me find out break-even point for you. Okay, see. Break-even sales. Sorry. For break-even sales, I'll require PV ratio, no? So PV ratio is contribution upon sales into 100. For every 1 rupee of sales, it contributes 40 paisa towards contribution. So therefore, PV ratio must be 40%. Break-even sales is nothing but fixed cost divided by PV ratio. So therefore, this is 5 lakhs, correct? Divided by 40%. So therefore, break-even sales will be 12,50,000. Okay. But this is not your answer. They have not asked you only this. What they have asked you. I'm reading this line now and I will read the required part. A company's sales could decrease by 50% before it will start to incur losses. See, this is your break-even sales. This will represent that 50%. If the sales fall below this, which is 50% of your sales, okay, then in that case, you will start to incur losses. So therefore, if your sales is say 100, your break-even sales will be 50. That is whatever that first line says. And this figure is 12,50,000. So therefore, your sales must be how much, beta? 12,50,000. Understood this? Your sales must be, your sales must be how much? 25 lakhs. So try to be thinking, currently your sales must be this much. If it drops below 50% of this, 50% of this will be giving you all 12,50,000. If it drops below this, means you are going below break-even sales. Then in that case, there will be losses, no? Okay. So therefore, currently sales must be 25 lakhs. So therefore, this should be your answer as such. Okay. That's it about this question. Slightly a different kind of questions, to be honest. Okay, but a good one, yaar. Okay, just like it doesn't take time, but it requires good mind. Okay, chali, all done. Question number 6. We'll start away with question number 7. Nice question to be done. Material costing, your chapter number 2. XYZ Limited is engaged in the business of manufacturing product A. The material required for the manufacture of product A is material B. So product is called as A, for that B is required. Each unit of product A requires 2 kgs of material B. However, the yield of each unit of B is 80% of the input. Okay, see, for 1 unit of A, 2 kgs of B are required. Okay. But whenever you input B, 20% is lost. And only 80% remains. Okay, that will be going inside product A. So if you want, you can think it up in this way. If you input 100 kgs inside your production process, 20 is lost. So therefore 80 is left. This 80 will be going inside the product. This is similar to 2 kgs. So therefore you'll have to be consuming far more. So 2 divided by 80%. It will be coming to 2.5 kgs. So therefore, for each unit of product A, 2.5 kgs of B are required. Actually, 2 kgs are required, but then yield of material B is only 80%. So therefore, you'll have to input more of B. So 2.5. I hope that's understood. The details governing the production requirement for the year is as follows. Projected sales of product A for the period is 10,000 units. Okay. Opening stock of product A. This is A. This is A. Opening stock of raw material B. They have tried to confuse as much as possible. Okay. Ordering cost per order. Okay. This will be called as A. Sorry, this will be called as CA as per our symbols. Okay. You might use the different symbols if you're not a student. So this is your ordering cost. Okay. Ordering cost is 500. That is CA. Rate of overdraft and obsolescence rate. Both of them in this case will form I for you. Rate of overdraft is I% and obsolescence rate. So therefore stock will become old. So therefore you need to stock more, no? Okay. So 12.5% is for that. So totally I will be nothing but 25%. Okay. Then Purchase price of material B is 20 per kg. So therefore, this will be your CPU. Current purchasing policy. Remember this. So currently we purchase quarterly only. Now this line is super important, and this is where many people might be going wrong. Maximum usage is more than minimum usage by 100 kgs. Okay. Waiting time from the date of order. So therefore, this must be your lead time. 4 to 8 days. So lead time is in days. Based upon the information, determine the following. EOQ, okay. ROQ, okay. Reorder level. Maximum stock, minimum stock. Big question here. Profitability analysis of EOQ versus ROQ. If the volume discount of 5% is provided for quarterly purchase by the supplier, will your answer in 6 above change? Okay. Now see. If we have to be solving the question, part 1 is your EOQ. EOQ formula is what, beta? Square root of 2ACA upon CI. Okay. Now few things. Square root of 2ACA upon CI. CA is 500 over here. CA is 500. CI in this case is CI CPU into INA. CPU is 20 into 25%. So therefore that will be 5. You require A. What do you mean by A, beta? A is nothing but number of units of raw material to be purchased in 1 year. Okay, that is nothing but A, no? Tell me one thing, in this question, what do you purchase? What do you purchase? Sir, we purchase raw material B. So therefore, I want raw material B, how much it is to be purchased. But that is not given to you in the question. So sir, then what to do? So raw material B is required for production of which product, beta? Product A. So one small thing that I'm doing, first of all, let me make production budget for product A. Okay, production budget for product A. How do you make your production budget, beta? Quantity sold of A. We'll start away with that. Add closing stock of product A less opening stock of product A. You will arrive at quantity produced. Based upon quantity produced only, we will try to be having the requirement for the raw materials. So quantity to be sold is 10,000 units. That is given to you. If you will search the entire question, quantity sold is not there. So therefore it is 0. Okay. Opening stock of product A, 948 units. So therefore 948 units. So 10,000 minus 948. 9052 units. This is quantity to be produced of A. Okay, this is quantity to be produced of A. Now, in this case, you require A over here, beta. You require RA. Number of units of raw materials to be purchased in 1 year. Now see, we have made production budget. But now we wish to be making our next budget. Sir, what is that? We have to be finding out quantity to be purchased of raw material, you know. So therefore, let's make purchase budget for raw material B. For raw material B, we have to be finding out purchases. Sir, but purchases are not given to you. Yes. If ever purchases are not given, what do? We start away with quantity consumed of raw material, that's B. We add up the closing stock of raw material, that's B. We will less up the opening stock of raw material, that's B. You will be arriving at quantity to be purchased of raw material B. So try to be managing these particular things. Okay, so when does raw material get consumed? Whenever you all produce. You will produce 9052 units of product A. And every unit of product A requires 2.5 kgs of raw material B. We calculated that 2 divided by 80%. So 9052 into 2.5. 22,630. Add closing stock of B. I guess closing stock of B is not there. Opening stock of B is there. So opening stock is 2630. Closing stock is not there. So therefore that's nil. So I guess this particular thing will be 20,000. Okay. That's it. This 20,000 is nothing but A for us. In our formula of EOQ, this figure is AR. This much you need to be purchasing in the entire year. Now let us start away with the first part. And the first part you got to be finding out EOQ. EOQ is square root of 2ACA upon CI. 2 into 20,000. CA was 500 and CI was 5 rupees. No, we computed that. So 2 into 20,000 square root. 2,000. I guess raw material in this question is measured in kgs. So therefore 200 kgs. This is your first part. Second part. Second part was what? Reordering quantity. See, ideally you should order, just a sec, I'll write down the EOQ that we got. Ideally we should order 2000 kgs at one time. But currently we have a policy that we order quarterly. Okay. You want to order how much in a year, beta? 20,000. If you will order quarterly, that means the quantity that you order will be 20,000 divided by 4 quarters. That is nothing but 5,000 kgs. So therefore this answer will be 5,000 kgs. Then third one, ROL. Now, problem for ROL is, now if you try to be thinking part 3, part 4 and part 5, these are all those levels that we all compute now. For all those things, what you all require is consumption, and then you all require lead time. You require maximum, you require maximum, you require minimum, you all require minimum, you all require average, you all require average. And then maximum you will require one other thing, that is reordering quantity. How much quantity do you order each time? Let me get this answer, then I'll compute all those things super fast. Okay. Consumption. See. Lead time is in days. So I will require consumption per day, right? Acha, lead time is in days. How much, beta? See over here, lead time 4 to 8 days. So minimum must be 4. Maximum must be 8. Has anything been given about any other average thing? No. So then if nothing is given, average is a center number. That will be 6. Is that fine? Okay. Now, about your consumption. Maximum usage is more than minimum usage by 100. Keep this thing in mind. Keep this thing in mind. Okay. So I don't know maximum. I don't know minimum. Okay. But average I will know. See. Consumption per annum is this figure. This is your quantity consumed. No, I've written over here. Now, I'll assume 365 days in a year. 22,630 divided by 365. 22,630 divided by 365. This will be giving you all average consumption. So, average consumption is 62 kgs. Now, see, by default, average will be in center of this and this. And difference of this and this is 100. So can we say, think of something like this. This is maximum. This is minimum. Average by default should be coming in the center. So therefore average is 62. But this total is 100. So can we say 50 will be coming on this side. 50 will be coming on this side. Huh? So therefore maximum will be how much? 62 plus 50. 62 plus 50. And over here, understood no everybody? Over there it will be 62 minus 50. So therefore this will be 112, this will be 12. Understood this? And you all can see that maximum is more than minimum by how many kgs beta? 100 kgs. That is whatever the question I told as such. Okay. Now, this is done. Now, I require one other data to be completing all the formulas. Okay. And that is how much quantity do you order? I don't know that. Why? Because if you say, sir, I will order based upon EOQ, then it will be 2000 kgs. If you say, no, sir, I currently have a policy to order quarterly. Then it will be 5,000 kgs. So it can be to anything, whatever you all want. IC has given both the answers. I will also be giving both the answers only. So let's try to be computing ROL. ROL is nothing but maximum consumption into maximum lead time. So maximum consumption is 112 kgs into maximum lead time into 8. So 112 into 8. 896 kgs. Acha. Then you have maximum possible stock level. How do you compute that, beta? We order the things at ROL. If you want maximum stock, think minimum consumption. Think minimum lead time. And then try to be thinking stock will come immediately after the minimum lead time. So therefore, order the quantity. Okay. I will calculate this thing twice. Once based upon if I follow EOQ funda, and once if I follow that quarterly. I'll call that thing as the ROQ funda. Okay. So ROL 896 minus minimum consumption. Minimum consumption is 12. Minimum lead time is 4 plus EOQ is 2000. This figure is 5000. So 896 minus 2848. 5848. These are the two answers that are possible. Anything is altogether fine. Okay. IC has done both the things, so therefore I did. Because I don't know what is the quantity that we'll order. Should we order based upon the EOQ? Should we based upon our quarterly policy? So I've done both. Okay. Wait, what all is done? 3 is done. Maximum stock. This is like beta. First is done, second is done, third is done, fourth is done. Now minimum stock. Okay. This is fifth one. I guess this was the fourth one. Okay. Fifth one. They want minimum stock level. Minimum stock level means minimum desirable stock level. How do you compute that? If we order at ROL, usually stock will come in average. Stock will come in average lead time, and you try to be thinking that you will be consuming average. That is whatever is the meaning of minimum desirable stock level. Your minimum desirable stock level means what here? If those things happen, that usually should happen, what should be your minimum stock? Okay. So ROL was 896 minus average consumption is 62. Average lead time is 6. So 62 into 6. 524 kgs. Sixth. Profitability analysis of EOQ versus ROQ. Okay. So what I'll try to be doing, they want profitability analysis. So we'll try to find out T. Okay. So therefore T under EOQ I'll do first, then I'll be doing ROQ. So it will be TCA plus TCI. What is TCA? A by Q into CA. What is TCI? Q by 2 into CI. Correct? So A is 20,000 divided by EOQ. We are going to be ordering 2,000 units at one time into CA. That is nothing but 500. So therefore, this should be 5,000, I guess. TCI is Q upon 2. That is 2,000 is your EOQ divided by 2 into 20 rupees. No, I guess. No, into 5 rupees. Na? Your CI was $5, na, I think. Yeah, it calculated that thing for you. Yeah, so CPU into IA is CI, na? CPU into I. 20 into 25%. Okay. So it will be 5,000. In any case, if you all remember, your total, your TCA and TCI are same under EOQ. Let's compute it under ROQ. TCA, A by Q into CA, 20,000 divided by, you order 5,000 units at a time, into 500. So therefore 4 orders, this will be giving you all 2,000. But obviously TCI will increase because you're going to be keeping more stock with you. So 5,000 divided by 2 into 5. This is 12,500. So therefore 14,500. So in any case, EOQ is always the best option here. Okay, your total cost is always the least. That is why it is called as the best option. No? So therefore that's your answer. Go for EOQ because there will be savings of 4,500. Okay, that is this figure minus this particular figure. Okay, then 7th. If a volume discount of 5% is provided for the quarterly purchase by the supplier, will your answer to 6 above change? Definitely it will change, because if you are going to be getting discount, no, then we are interested in purchase cost also, because purchase cost will also change here. So therefore, now we are interested in T including purchase cost. We are interested in T including purchase cost because there is discount here. So purchase cost also changes, no? So under EOQ. Now see, those guys are saying that if there is 5% discount provided for quarterly purchases. So if you purchase quarterly, then there is 5% discount. That itself means that if you're going to be going for EOQ, then there is no discount as such. Okay. So if there is no discount, your TCA, TCIA will be same only, 5,000, 5,000. But later on, we have to compare this with the other options. So add purchase cost. Purchase cost for the entire year is nothing but A into CPU. You purchase 20,000 units in the entire year. CPU that supplier will be charging you is nothing but 20 bucks. So therefore, 20,000 to 20 will be giving you all 4 lakhs. Total cost will be 4,10,000. But if you go for quarterly, I'll call that thing as ROQ. Okay. Over there, you're going to be purchasing 5,000 kgs at one time. That guy will be giving you all 5% discount, no? So therefore, discount that is there is 5%. Okay. TCA, A by Q into CA, 20,000. You are going to be ordering 5,000 kgs at a time into 500. This will be same as before, 2,000 that we all had calculated over here also. But then please do remember TCI, Q by 2 into CI. Q by 2. Q by 2 is nothing but 5,000 divided by 2. But how is CI calculated? It's CPU into I. But CPU now will not be 20 rupees. It will be 19 rupees. Sir, how? 5% discount, no? 20 less 5%. 19. Into 25%. CPU into I, no? So therefore, this will be your new TCI. That is what we all have always done, beta. 2,500 into 19 into 25%. So 11,875. Add purchase cost. A into CPU. 20,000 units you will be purchasing. That guy offers you 5% discount. So 19 rupees. 3,80,000. So total cost will be 393,875. Now as compared to this option, now as compared to the EOQ, this option becomes far more attractive. So therefore, this offer should be accepted. If there is 5% discount, then in that case, we should try to be availing that. It will be far better. Okay, chali. That's it about this entire thing. This thing is altogether done. Chali guys, we'll start away with question number 8. This is a question on labor costing. Might be one point, okay, you'll have to think back whatever we all have done. Now that point I'll try to say first. One of the ways to give bonus to a particular person is to be increasing the standard time. The moment you increase the standard time, automatically bonus will come because time allowed will rise. If time allowed will be rising, person will become more efficient. No, that thing will be coming in this part. Okay, let's start off with the question. The existing incentive system of Sakshi Limited is as under: normal working week, 5 days of 8 hours each, okay, plus 3 late shift of 3 hours each. Okay, so therefore, normal work week is 5 days of 8 hours each, so therefore 40 hours. And 3 late shifts of 3 hours each, means this particular thing will be nothing but 9 hours, okay. Rate of payment, day work 160 per hour, late shift 225 per hour, okay. So I guess day shift they'll be working for 40 hours and late shift they'll be working for 9 hours. Let me just compute this thing. This will be 6400, 225 into 9. This will be 2025. Okay. So therefore plus 6400. This is 8425. Although I have not read the entire question, but this is whatever I'm trying to be thinking till now. Average output per operator for 49 hours week. We know how 49 comes, right? 40 hours plus 9 hours, including 3 late shifts, is equal to 240 units. So currently these guys are making 240 units, okay, by working for 49 hours, and our payment is 8425 to them. In order to increase the output and eliminate the overtime, it is decided to switch over to the system of payment by results. Payment by results means I'll not pay you fixed amount now per hour. You try to produce, and then based upon whatever you all produce, based upon your efficiency up and so on, we will give you the amount. The following information is being obtained. Time rate as usual, 160 per hour. This 160, time rate as usual means 160. Please do remember, now overtime will not be there also. Further, basic time allowed for 15 articles, 2.5 hours. Basic time allowed. Just a sec. For 15 units, it is 2.5 hours. Can you say 2.5 hours is nothing but 150 minutes? 2.5 hours is 150 minutes. No? So 150 minutes is for producing 15 units. So therefore 1 unit should be taking 10 minutes. Okay. 10 minutes for 1 unit. 10 minutes for 1 unit is basic time allowed. That can also be written as, if for 1 unit we'll be taking 10 minutes, means in 1 hour we'll be making 6 units per hour. Both these things are same only. Okay, 6 units per hour, or it is 10 minutes per unit. Further, piece work rate. Okay, add 20% to the basic piece rate. So whatever is a piece rate that comes, add 20% to find out the piece rate. Premium bonus, this is whatever I was trying to talk of. Premium bonus is add 50% to the time. One of the ways to give bonus is to be increasing the standard time. You all are aware of that. Okay. So therefore, whatever is your time allowed, please add 50% to that, because that will increase the efficiency of the worker, because time allowed will increase. So therefore, automatically worker will be eligible for more bonus. Okay. So therefore, this point is important. I'm writing over here important. So whatever is the time allowed, in this case, you increase it by 50%. If during the last week 270 articles were produced in a 40-hour week, because now overtime will be eliminated, so workers will be working for 40 hours. Calculate weekly earnings of one operator under the following systems. Existing rate, existing time rate. I already calculated that, to be honest, 8425. Okay, so first one. Second one, straight piece rate. Okay, third is row 1, fourth is I'll say. Prepare a statement showing hours worked, weekly earnings, number of articles produced, and labor cost per article for one operator under the above systems. Okay. So part A, existing time rate. I will just write down this thing. You all can write down with me only. This is A, existing time rate. $40 hours into 160 plus 9 hours into 225. This will be 8425. This is part A. Part B. Now see, please do remember that this was the existing rate. For part A, you're going to be seeing this, whatever was happening now. But now these guys wanted to eliminate the overtime. So therefore, those guys have shifted to payment by results method. And over here it is whatever you all need for calculation of the further work. See what these guys are saying. Straight piece work. One sec. What do you mean by straight piece work? One single rate per unit irrespective of your efficiency. How do you compute your wages under SPR system? Please don't write. Wages under SPR system is equal to number of units produced into rate per unit. Now tell me one thing, now those guys have produced how many units beta? 270. So therefore 270 into rate per unit. So you want rate per unit here. Now rate per unit, in case you all know it is okay, but in this question if you all see rate per unit is not given, but see one line is given. Add 20% to the basic piece rate. So therefore compute basic piece rate first. So what I'll be doing, let me compute basic piece rate. Okay. Once I'll be computing that, then I will compute the piece rate. That will be nothing but this answer, whatever I get above, plus 20%. Is that all okay? Fine. Okay. Now, let's compute rate per unit. Now rate per unit, in case it is given, it is fine. In case it is not given, if you all remember, in many questions, we all have done like this. Rate per unit will be nothing but rate per hour divided by rate per hour divided by units per hour. If you all start to be thinking this, if you will be doing this division, R and R will get cancelled. You will arrive at rate per unit only. That's what we all want. Achha, but rates are calculated before the work starts, correct? So therefore, in this case, we always will be taking standard units per hour. That's common sense, right? Because actual units will be known at the end of the period, but this rate should be known to you before the workers start here. So rate per hour is going to be 160 divided by standard units per hour. We calculated that thing, I think. You'll have to show this working also somewhere. In 1 hour, we should be making 6 units. So therefore 160 divided by 6, rupees 26.67, 26.67 plus 20%. So therefore rate per unit will be 32, 270 into 32 will give you 8640. This will be the payment under the SPR system, straight piece rate system. Now, just one thing, this calculation I like to show over here. Standard units per hour. For that, what I'll be doing, standard time per unit. So in 150 minutes, that is 2.5 hours, no? You should be making how many units beta? 15. So therefore, this will be 10 minutes per unit. That is itself equal to 6 units per hour. Both these things exactly mean the same thing only. Okay. Either this you can be saying or this. Chalo. Part C. Part C in this case is all about row 1 system. Now under row 1 system, what do we do? So we do time allowed for actual production. We do time taken for actual production. Difference is nothing but time saved. Once you arrive at time saved, you compute your basic wages. You compute your bonus as per the formula. Time saved upon time allowed into basic wages. Once you all do that, this will be giving you your answer. Now, part D is what? Wait, I still have to be computing, but part D is what? Halsey premium system. In Halsey, basic wages will still remain same. Okay. But bonus, 50% of time saved into rate per hour. Okay. And then we shall start to be computing. Okay. So first of all, time allowed for actual production. What was actual production beta? 270. 270 units. Every unit should be taking 10 minutes. 2700 minutes. Let's convert it into hours. So therefore divide by 60. So 270 divided by 6, 45. Most of the people will be writing 45 only, but we don't write on 45 because to give extra bonus, the management increased the time, that means time allowed, by 50% beta. So therefore, in this case, add 50%. Do that. 45 plus 50%, 67.5. Okay. Time taken, I guess workers have worked for 40 hours. It is given to you also. So 40 hours over here. Let's subtract it. This is 27.5. Time saved is 27.5. Let's pay the workers their basic wages plus bonus. Basic wages will be paid for 40 hours at the rate of 160 rupees per hour. Please do remember Halsey Rovana time systems. So 6400. Then bonus. Time saved upon time allowed 27.5 divided by 67.5 into basic wages. Basic wages in this case are 6,400. So 27.5 divided by 67.5 into 6,400. 2607 plus 6,400. 9007 will be the bonus. Sorry, will be the total wages including the bonus. Now under Halsey also, basic wages will remain same 6,400, but bonus will be 50% of time saved, that's 27.5 into basic wage rate per hour, that's 160. So computed 2,200. So therefore this will be 8,600. That should be your answer. Okay, these are all your parts A, B, C, D. Okay. So what is there in part 2? Prepare a statement showing hours worked. Okay. First thing. Weekly earnings that we calculated. Second. Number of articles produced that we all know only. Third. And labor cost per article for one operator under the above system. So what I have done, I've made a statement whereby I've written these particular things. See over here. Hours worked. Currently, those guys were working existing time rate for 49 hours. Under the new systems, they are only going to be working for 40 hours. Okay. Weekly earnings. Over here, 8,600. Over here, 9,007. Under piece rate system, it will be 8,640. And under the current system, it is 8,425. Okay. Achha, units produced. Under the current system, they were making 240, but under the new systems, 270. So therefore, 240, 270, 270, 270. Achha. Labor cost per article. So 8,425 divided by 240. This will give you 35.104. 8640 divided by 270. This should be 32 only, I think. Okay, based upon this 32 only we calculated. No, this figure. 9,007 divided by 270. 33.36. 8600 divided by 270. 31.85. These should be your 4 answers, I think. Easy question. Only thing that I doubt is how many people will actually understand this part when they read the question by themselves. Like, why we have added 50% over here. Okay, that is because of this particular line. Premium bonus. To give bonus to the workers, one of the ways is to be increasing the standard time. If you do that, automatically bonus comes. Just to give you a small example, suppose earlier time allowed was 10 minutes. You were completing the job in 8 minutes. You are efficient. Now you are efficient to the extent of 2 minutes, correct? But if I increase the standard time from 10 minutes to 13 minutes, now 13 minutes job you are completing in 8 minutes. Automatically now you will get bonus for saving 5 minutes, no, as such. So therefore, one of the ways to give bonus is to be increasing the standard time. Okay, chali, that's it about this question. So guys, we'll start away with question number 9, absorption costing. Now this question I consider as one of the most important questions of this entire RTP and very nice question, to be honest. Let's start it off. SA Limited has 3 production departments, M1, M2 and A1, and 3 service departments, stores, engineering and general service. engineering department serves only M1 and M2. Now, I'll say in advance, this question is all about allocation, apportionment, reapportionment, finding out absorption rates and applying those absorption rates to the products. Okay. So, somewhere or the other, reapportionment will come. In reapportionment, you transfer the cost of the service departments to the production departments. So, engineering services cost will be only divided among M1 and M2. That is whatever that line told. Further, the following relevant information with product X and Y are as follows. Product X, product Y, M1, M2. How many machine hours are needed? Then A1, how many labor hours are needed? So I guess so. This must be given because for M1, we must be following machine hour method. For M2, we must be following machine hour method. For A1, we must be following labor hour method. Okay, so these two must be dependent upon machine hours. This must be dependent upon labor hours. The annual budgeted overhead cost for the year is as follows. M1, M2, A1, stores, engineering, general service. These are your 6 departments, beta. 3 production departments and your 3 service departments. So these are the 6 departments. Indirect wages is overheads. Its breakup is given to you. Consumable supplies, its breakup is given to you directly. So therefore, these things are there. Acha, then depreciation on machinery, 7,92,000. Insurance of machinery, 1,44,000. Insurance of building. Read this and try to think what you will be doing. Total building insurance cost for M1 is 1/3 of annual premium. So 64,800 is your total insurance cost. Out of that, 1/3 of the insurance is for M1. Keep that thing in mind. Further, power 129,600, light 1,08,000. Okay. Then rent 2,53,500. Fine. But for rent, something else is also given to you. The general service department is located in a building which is owned by the company. Can we say if it is owned by the company, then there is no rent for it, no? It is valued at 1,20,000 and charged into the cost at notional value of 8% per annum. Okay. The cost is additional to the rent shown above. So apart from this rent, this is the actual rent that you will pay. This is the rent that you will pay. Okay. Apart from this, one small thing, the general service department. There's a last department that is there. Okay. Now that is owned by us. So we charge notional rent and notional rent is not included in this. Okay. Now please do remember, no notional rent is ever taken in the absorption rates. I've explained the fund of notional rent when we all were doing chapter number 7, reconciliation. Notional rent means what? Notional rent means you're not paying any rent. But for inter-firm comparison, comparing my cost to the cost of a similar company in the same industry, I charge notional rent. Notional rent is directly written in the cost sheet at a suitable place. Okay. It is never ever included as part of absorption rate. So this line that is there is of no use to us. Okay. But then one small thing, that rent is not paid for that general service department because it is owned by us. That is why we are charging notional rent. But notional rent does not form part. Again, I say notional rent does not form part of your absorption rates. It is directly an expense that you can put in your cost sheet. Okay, but it is never ever included as part of absorption because that's not your cost, to be honest. It's a notional cost. Acha, the value of issues of materials to the production departments are in the same proportion as shown for the consumable supplies. This line is again super important. Okay. Acha, one small thing. Read these names and keep this thing in mind. Stores department is your first service department. Engineering service department is your second servicing department. General service department is your third service department. Keep these things in mind. What must stores be doing? It must be supplying stores to the other divisions. Engineering service must be doing engineering, rectification of the machines, or making better machines, some designing of the machines. It does this work for M1 and M2. To be very honest, M1 and M2 must be dependent upon machine hours because A1 is dependent upon labor hours. General service, I cannot tell you what they must be doing, but then some general services. Okay. The following data are also there. Department 1, 2, 3, 4, 5, 6. Book value of the machines are there with you. Area is there with you. Effective HP hours percentage is there with you. Okay. Then production labor hours are there with you, means direct labor hours. And then capacity machine hours required. Prepare an overhead analysis sheet showing the basis of apportionment of overheads to the various departments. So therefore, this first step is apportionment. Second, prepare a statement allocating service department cost to the production departments, ignoring, very important line, apportionment of the service department cost among the service departments. So therefore, do not divide the cost of service departments among service departments only. That means you will have to follow direct method of reapportionment. You will have to be following direct method of reapportionment. Direct method means service departments do not serve each other. Third, calculate suitable overhead absorption rates for the production departments. Okay. Find out your absorption rate. Calculate the overheads to be absorbed by the two products. So therefore, charge overheads to your product and find out overheads per unit. Charge absorption is to your products and find out overheads per unit. Okay, chali. Now, let's start away with the first part. Only try to allocate all the overheads to the various departments. See, in that, you have the breakup of indirect wages among the 6 divisions. You have the breakup of consumables among the 6 divisions. So therefore, we are going to be making the following columns, like always in the chapter of overheads: expenses, amount. Then in that case, you all have your basis. Then 3 production departments and 3 servicing departments. Okay. Now, in your blank sheet, I have done that. Okay. This is your first expense. This is second expense. This is third expense, this is fourth expense, this is fifth expense, sixth expense, seventh expense, and eighth expense. These expenses I've already written over here. See, indirect wages, its breakup is there with us. I just now spoke. Then consumable supplies, we have the breakup just now I told. 1, 2, this is 3, 4, 5, 6, 7, and 8. Let's do our allocation. Let's do our apportionment. Let's then start to be doing the other parts as such. Okay. Depreciation on machinery. Now think in what ratio will you divide. Now, see the data now that is given to you. I guess depreciation should be divided in the ratio of book value of machines. What else here? Okay. So therefore, this is book value of machines. Okay, so you can take that ratio and divide it. I'll not be spending your and my time in doing that particular thing. So take this ratio and divide the things in that particular ratio. All okay, beta? Okay, then the next expense. Next expense is insurance of machines. I guess this can also be divided in the same ratio. Yeah, it is book dependent upon machines only, no? So take that particular ratio. In case you all want me to write down the ratio or you all want to be writing down, it will be this ratio, 240 is to 180. In both the cases, 240 is to 180 is to 60 is to 24. 60 is to 24 is to 72 is to 24. Divide the things in this particular ratio. Okay, further. Now, insurance of building. Now, remember this. Insurance of building was how much? 64,800. But those guys had told that for M1, it is 1/3 of the annual premium. So, out of 64,800, 1/3 beta, 1/3. So, do one small thing. 64,800 divided by 3. 21,600. 21,600 we should directly give in this case to M1 department. Okay, so therefore, how much is left? 64,800. How much is left now? 43,200. Try to be thinking, how will you divide insurance of the building? I guess so, it can be divided in the ratio of area, no? So therefore, 43,200, you all can be dividing in the ratio of area. Is that all okay? I guess so, this will be the only option as such. Okay, but whenever you're dividing in the ratio of area, please do one small thing. Do not take this particular figure, because now this amount is to be transferred to all other divisions except M1 beta. That's very obvious. Okay, so therefore, what will be your ratio? I'll write down 60, 80, 20. One sec. I'll write down nil first. So therefore, by mistake, you all don't give anything to the first department. 60 is to 80 is to 20. Okay. Dash 60, 80, 20, 25, 15 is to 25 is to 15. Divide the things in this particular ratio. Okay. So 21,600 is gone. Balance, you can divide the things in this ratio. Acha, then. Your next cost in this case is power cost. Is there any adjustment against power cost? No, I don't think so. So therefore, then what to do? Power cost you'll be dividing in what ratio, beta? I guess so you'll divide that in this particular ratio. Effective HPR's percentage. Directly that percentage is given to you. So horsepower hours are getting used. Okay, means power will be measured in horsepower hours, no, I think. Okay, so directly that bifurcation is given to you. So therefore, this will be the ratio. 50, 35, 5. This is HP percentage. 50 is to 35 is to 5 is to nil is to 10 is to nil is to 10 is to nil. So therefore, divide the things in this particular ratio. Okay, further, light. For light, there is no adjustment, no? I guess I've told you ample number of times. Light can be divided in the ratio of area, beta. So therefore, light, you can divide that in the ratio of area. One small question. It will come to all, yes or no? It will come to all only, no? So therefore, light, please divide it up in this particular ratio. Area. But then do remember, you have to give to the first one also. So therefore, you require area of the first one also. So therefore, it will be 50. Rest is same as this. 60, 80, 20, 25, 15. In this ratio, you all can divide it. Okay. Lastly, rent. Now, rent, I think so, should be divided in the ratio of area again. But do not give anything to the last division because it is owned, no, by us. So therefore, rent again will be in the ratio of area only. So 50 is to 60 is to 80 is to 20 is to 25. But last one in this case will be nil. Okay. Bas. You all do one small thing. You all start away this work. Okay. Those guys who are solving with me, please solve it. Once it is done, you all tell me the totals. Other people, you all can pause the video over here. Okay. Those who are watching the recorded ones. And once your totals are done, then in that case, you all restart the video from here. Okay. Now, these are the totals that you should have got. Please just verify. 1718740, 1620560, 646, 620, 291, 980, 359, 240, 261, 560. Let's do our reapportionment. Now, reapportionment, we have to be following direct method. Okay. In direct method, order doesn't matter. So, therefore, we all have 3 service departments. No, I've written one by one over here. Okay. And whenever we reapportion, nothing comes back to the service department because it is direct method. So therefore, ultimately 291, 980 will get subtracted from here, will go to the other divisions. Nothing comes back over here. 359, 240 will get subtracted from here. Nothing goes back to the service divisions. 261, 560 will get subtracted from here. Nothing goes to the other division. After that, this particular thing will become nil. We will get our BOH, divide by BLA, get your absorption rates. Okay, now see how to be dividing. Can I do one small thing first? I'll go in order only, stores. Now, is the basis of reapportionment given to you in the question directly? If you'll remember our question, it was given percentages or some basis how. Here it is not given. So then I start to be thinking, yeah, stores department, what must stores be doing? it must be supplying stores to the production divisions, correct? It must be supplying stores. Stores could be, say, something like, say, acids. It could be grease, okay? Or it could be material also. It's something like purchased. Basically, stores keeps the material, okay? And material, it will be supplying to the other divisions. That is why one line was there. The value of the issues of materials to the production departments, okay, are in the same proportion as shown above for the consumable supplies. Those guys are saying that you issue the materials. Who issues the materials? Stores department. They issue it in the same ratio as consumable supplies. Beta, consumable supplies is over here. I only require for the first three divisions because I am doing direct method. So therefore, 291,980 will get divided among M1, M2 and A1 in the ratio of consumable supplies. So therefore, you can write over here consumables. I have bit less space. 252 is to 364 is to 84. Get this answer, get this answer, get this answer. Please do it. Then, get it please? Acha, engineering service. Those guys are told right in the first paragraph, engineering service division only serves M1 and M2. So therefore, no part of engineering division cost will be coming to A1 for sure. So therefore, nil. Left are the other two things. Okay, other two things in this case are M1 and M2. In what ratio to take? I guess so. These two divisions are dependent upon machine hours. So I think a better option it is, let us take the ratio of machine hours over here. And that thing was over here. Machine hour capacity 4:5. That ratio I'm taking over here. Then, so therefore, it will get divided over here. Then, the next one. General service division. Now, general service, I think, should be coming everywhere only. I think so. Sir, what ratio, sir? I don't know. Honestly, you all can take any ratio. Sir, any ratio means you all can take this ratio also. You all can take this ratio also. You all can take this ratio also. But I have told you all many times in past, whenever the ratios are not exactly given, no, prefer ratios like machine hours, labor hours, because most of the expenses in real life are dependent upon these, and write down a note to that effect. So you can be taking machine hours also, you can be taking labor hours, but the problem is you cannot take machine hours. Why? If you take machine hours, nothing will be coming to A1. And I think so, cost of general service department should be going to all. Only for that reason, I'm going to be taking the ratio of labor hours. So therefore, over here, I'm going to be writing labor hours. So labor hours ratio in this case is 40, 30, 60. 40, 30, 60. So 4:3:6. You can divide by 5 also, no? 4:3:6. Correct? 20, 15, 30, na? 20, 15, 30, na? So 4, 3, and 6. Correct. 4, 3, and 6. Okay. You all do that. Arrive at your BOH. You all can do that thing in just a while. Okay. Or do it, no chalo. You all do it and tell me the amounts, please. Okay. Just check up, are these your amounts? Yeah. 20. Last one. Done? Just check up, please. If you have not got, pause the video, then you all can start again. If you're watching on recorded mode. Listen. Divide by budgeted level of activity, BLA. I guess for first two divisions, we should be following machine hour method, beta. These are the number of machine hours, 40,000, 50,000. But I guess so for the last division, we should be following labor hour method, yaar. labor hour 3 lakhs. Please divide. Is it 5.16? Please just check. Or 51.6? Just a sec. 20 lakh 64,002. 51.6. Yeah, sorry, I forgot that last two. Then 20 lakh 32,318 divided by 50,000. Is this 40.65? The last one. 8,02,380 divided by 3 lakh hours. It was 3 lakh hours, no? Just a sec. Yeah, 3 lakh hours. This is 2.67. It's 2.6746. So I'll take that as 2.67 only. Because the next number is 4, no? That is why. That's it about this question. I guess this will finish off your part 1, part 2, part 3. You have to find out absorption rate. Calculate the overheads to be absorbed by the two products X and Y. And see, for X and Y, each unit, no, these hours were given to you. For X, 10, 4 and 14 hours are needed. 10, 4, 14. Just a sec. I made a last statement over here. 10 hours, 4 hours, 14 hours. Just a sec. I'm very poor in my memory now, yaar. 10, 4, 14. Obviously, machine hours and labor hours. 6, 14, 18. 6, 14, 18. Okay, these are the number of hours, I think, for one unit of X and Y. I think so, it must be like that only. Absorption rate, you calculated, no? 51.6, 40.65, 2.67. Okay, so see, for every machine hour, you charge 51.67 in department M1. For 1 unit of X, we'll be taking 10 machine hours, right? So therefore, how much overheads are to be charged? 516. 40.65 into 4, 162.56, 2.67 into 14, 37.38. Then 51.6 into 51.6 into 6, 309.6. 40.65 into 14, 569.1. 2.67 into 18, 48.06. Just take up, are these the answers? You do the totals also and tell me, please. Is this 926.76? And this one 516 plus 162.56 plus 37.38, na? 715.9 or something. 715 point. I'm getting 94. Okay, whatever it is. Acha, I've written one note for all of these things. Reapportionment, we are following direct method. Stores department will divide in the ratio of consumables because of that line. Engineering service, it will be coming back only to the first two divisions and in the ratio of machine hours. And this one in the ratio of labor hours. Okay, but of course to all the divisions. Okay, that's it about this question. Not very difficult. Only thing that I thought that was difficult, to be very honest, I'll highlight that. This was bit okay. This was important. And reapportionment was, I think, quite a tricky thing in this question. So towards the last days, of your examination, means like before your examination comes, revise this question for sure in a proper way. Okay, chali. So that's it about this question. Chale guys, we'll start away with question number 10. Now in this question, I don't have much problem with the institute. Might be except one, but that we'll try to be seeing. Now this is a cost sheet. Okay, now what I have done in the student's copy also, the blank copy, I've completely solved this because I only have to try to tell you where will everything come. That's the only thing. Okay, rest in these questions, there's nothing much here. Let's start to be doing it. Carriage inwards. Sorry, the accounts of Ranu Limited for the year ended 31st of March 2025 show the following. Okay. Carriage inwards. This will be coming as part of purchases. So therefore add, or I'll directly write down, this will be coming in raw material consumed. Okay. So you can add it to purchases also. It means the same thing. In any case, purchases also comes in raw material consumed. No. Admin office salaries. These are office salaries, beta. So therefore, this is general admin. Further, bad debts written off can either be financial or can be taken as part of S&D also. Anything is altogether fine. IC has done this, so therefore I will be doing that. Okay, in any case, I will be writing a note also that we have taken it as financial and ignored from cost sheet. Alternately, you can take it also as part of S&D. Carriage outwards. I guess everybody knows that was the difference between carriage inwards and outwards. Whenever you purchase the raw material, whatever transportation you pay, that is carriage inwards. Whenever you're delivering the goods to the distributors or to the consumer, whatever transportation cost you incur for distribution, that is carriage outwards. So therefore, obviously, it will be part of distribution cost, S&D. GST, ITC allowed, 10,000. Now, GST, okay, ITC is allowed. ITC means input tax, so it is allowed. Okay. Now, one small thing, I'll keep on demonstrating where I've written all the things. Okay, that'll be far better. Let me read few other things and I'll demonstrate. Acha, GST is allowed. If GST is allowed, if you'll remember, first GST is your expense. So therefore, you add it to purchases because you'll have to reimburse. You'll have to pay to the other guy from whom you're purchasing. But later on, if you'll get the ITC credit for it, then in that case, you all can deduct it. Okay. So either you add and less, do both, or you all can ignore it. I think I would have done add and less. Okay, further. Salaries related to factory office. Now, as per me, this is one where I and IC will differ. Okay, but that's okay. I differ on institute for a lot of things. Salaries related to factory office. I think so. This should be administration related to production. Now, what I think, my personal view might not be so. ICAI borrowed this question before 2015. Okay. 2018, sorry. When the last new course hadn't even come. That time, no, there was no head such as admin related to production. All admin related to production was part of factory overheads. I think they copied, pasted the solution from there only. So in their answer, this is part of factory overheads. But now as there is a separate head, all the admin expenses in your factory, there is a separate head for it that is admin related to production. It should be coming over there. Okay, further. Production wages, this will be direct wages. Repairs to plant and machinery, this should be factory office. Rent, repairs, taxes, insurance, etc. of factory should be factory overheads. Of office should be general admin. Sales, that is your revenue item, will be coming last. Then stock of raw material on 1st of April, this should be opening stock, this should be closing stock. Materials purchase excluding GST, 2 lakh rupees. So therefore, this will be part of raw material consumed. Now see, whatever I have done till now, I am demonstrating wherever, because I have the solution, I've already written it. Opening stock of raw material, 50,000, that is over here. Okay, in raw material consumed. Add purchases, 2 lakh rupees. I've written that thing over here. Then GST on purchases, it's your cost, please add it. Then later on, you will be deducting it or less it. Instead of these two things, you can ignore it also. That's not a problem. Then carriage in, just a sec, ITC, it's done. Then carriage inwards 7150. Okay, that is one thing that I've done over here. Less closing stock. Closing stock is 64,500. That I spoke of right now. Okay, so this is your direct material consumed. Direct material consumed comes out to this much. Add your productive wages. Productive wages means direct wages. So therefore 1,20,000 you added, that will be giving you all prime cost. Okay. Further, then whatever I have spoken till now, factory overheads. See, keep on checking over here, beta. Factory overheads, factory overheads. Two things only. Yeah. So 4450, 8500. 4450, 8500. Okay, these two things are done. Then this is done, this is done. Okay, further. General admin is 12,600. General admin is 2,000. General admin is 12,600 and it is 2,000. Okay, so this is also done. Bad debts I'm ignoring from cost sheet and I write down a note for it. See over here the note. Bad debts have been taken as financial expense and ignored from cost sheet. Alternately, it can be taken as part of S&D also. Okay, this is done. Carriage outward should be part of your S&D. So check over here. S&D comes over here, no? So therefore, I've written over here. Further. Salaries related to factory office, 7,000. Salaries related to factory office, 7,000. Again, I'm saying ICAI has included this as part of factory overheads only. As per me, it should not be done. There is a separate head that is there of admin related to production. So therefore, I think so this should be put over there only. This is an admin expense inside the factory. Okay, further. Sales 4,50,000. So therefore, sales, I guess 4,50,000, 4,50,000. Last thing over here, sales. Okay. So I've ticked everything. Yeah, further, let's proceed. Traveling expenses. By default, I think traveling expenses must be of the salesman up and so on only. I think so. By default, it should be like that only. Yeah. So 2100. So this should be coming as part of S&D. That's what I think. Okay. So traveling expenses S&D. It will be traveling expenses of salesmen. In case you all wish to be writing, you all can. Okay. By default, we will think like that only. Okay. Manager salary 1/4 to office means admin and 3/4 to factory. Okay, so therefore that will be factory overheads. So this I'll divide it up into two parts. This will be coming as part of factory. This will be coming as part of general admin. You all can see that 7,500 comes over here and 2,500 will come over here. Okay, further. Depreciation on plant and machinery should be coming as part of factory overhead 6,500. So 6,500 depreciation on plant and machinery. Further, depreciation on office furniture should be part of general admin. 500. Further, director's fee should be part of general admin. So therefore, 6,000 will be coming over there. So 6,000 rupees general admin. Okay. Further, gas and water in factory overheads. Gas and water in office will be your general admin, 1,500, 500. Okay. So 1,500 over here and 500 over here. Okay. Further. General expenses will mean general admin expenses only. That's common sense, I think. Those the general expenses of the company, like some office expenses that we all incur. It should be taken like that only, I think. Again, not very clear, but I think that is very obvious that we are going to be doing that only. General expenses will mean not related to production, to be very honest. Okay. So 3,400 should be coming as part of general admin. Okay. That's it. Once you all do that, then I guess your cost sheet will be altogether done only. This plus this will be giving you all this. Plus this will be giving you all factory cost. Factory cost, in this case, add up this will be giving you your COP. There is no finished goods stock, so therefore this will also represent your COGS. Add general admin, add S&D, this will give you cost of sales. You all have sales. This will be your final profit figure. That's 68,000. Okay. That's it about this question. Not very difficult, to be honest. I'm still doubtful about this, why ICA has done this. But apart from that, I guess the things are all together okay. Okay, done. Chale guys, we all have finished from question number 1 to question number 10. Now for rest of the questions from 11 to 18, please join our complete free course of RTPs that is there on the link which I've given in the description, or you all can scan the QR code which is appearing on your screen right now. That is only done for one small kind of a selfish reason, and that reason is that whenever you watch the lectures through our website or on our app, you do not get any ads or distractions in middle. That helps you a lot in concentrating. Okay. So if you have watched till here on YouTube, all the questions that is from question number 1 to 18 will be there on that free course. And as I have told, please spread a word about us that all our lectures of costing are available free of cost on YouTube. Better option it is you watch them on our website, either through browser or through the app. That's it from my side. I hope that you all enjoy the lectures and I hope that you all do very well in your examinations. I will see you all almost on the day when the examinations for September 2025 will happen. All the best guys. Take care. Thank you.